We've just had an upward path on the stock markets. It's been, we're not used to a recession, but that is part of a cycle. It is part of the cycle. We just got to expect it to happen, and we can't just rely upon the central banks to always bail us out, because eventually they run out of firepower.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And with us today is a new guest, David Rhodes, the Executive Chairman of Empress Royalty. David, thank you so much for joining us today.
Pleasure, Elijah.
Well, it's fantastic to have you on. I wanted to first discuss the inflation that we've been seeing recently. The latest number is 9.1%. A lot of people argue that it could be double that based on how the U.S. calculates the inflation rate. So your perspective first on the high inflation that we've been seeing, how it's impacting the American people, and also what the Fed is trying to do to combat that. We just also got an announcement from the Fed that they're raising interest rates, but in a lot of people's perspective, it's not going to have the impact that they're hoping.
Yeah, so it's the big question everybody's asking. It's on top of all the Google searches. People are working out what inflation is. We've had a great period of very limited inflation, negative interest rates, which have been driving the growth. And obviously that now has, resulted in this inflation. Two things from my side. Over the last 5 years, I've seen my bills increasing. So inflation's been with us for much longer than we think. It's just now showing up in the way the governments calculate. And the big costs, obviously, if you look at the rents increases, wage inflation, you're seeing the cost of commodities have gone up significantly over the last 5 years as well. So all those have added fuel to the inflation fire. What the Fed are doing is they're increasing interest rates to stop people buying things. And the key way to do that is, if you increase interest rates, mortgages go up. And that will then reduce the amount consumers can spend. And that's one way to control inflation, stop people buying things. And the trouble is that's going to have a very negative effect on GDP. Consumer borrowing is going to obviously increase because people. So the whole net effect is reducing demand from consumers, which then will reduce inflation. The problem is there's other external factors. Obviously, the tragedy with the Russian-Ukraine war, that's driving up agricultural grain prices, because obviously Ukraine are a big producer of grain. So foodstuffs increasing. You've got obviously the gas prices and diesel prices going up because obviously Russia was a major supplier to the world. So other factors which they can't control. So whilst they can increase interest rates, and that'll obviously reduce demand and inflation, other factors are going to keep inflation high. So from my perspective, inflation is here to stay, and good luck to the Fed. And they've got another problem. They've got a lot of debt. I think, is it 30 trillion now of debt in the US? It's nearly there, I think. If interest rates go up, they've got to pay interest on that debt. And that's just going to increase their debt burden. So the Fed have got a really tough act. Controlling inflation with interest rates, yes, that's the key tool all governments use, but the negative effect of that for them is the cost of their debt is going up and up and up. And that means they've got a limit of how high interest rates can go. So can they use that as their main tool to a degree? But I think that's capped because they can't cope with the high interest rates because they've got to repay the debt and pay the interest. So they're in a tough position.
I think they are in a tough position. We heard Powell speak yesterday. Kind of people are saying that he obviously is trying to thread the needle between being hawkish and dovish. There's a lot of kind of back and forth there. Do you think he's going to be able to thread that needle? Because it seems like either way, whatever the Fed does, if they are hawkish, if they continue to be hawkish, or if they turn dovish, it's disaster, it seems like. So your perspective on that?
I totally agree. I mean, impossible task. They've already, in my view, ruined the party. Too much money, cheap money for too long. And I remember in the stock market, there used to be some phrases, the Fed put, where whenever there's bad news, the Fed just gave more money into the system and kept the stock market rocketing high. And when you get obviously politicians involved saying, your pension plans are the best ever because of the policies that got in place. The stock market is the barometer of a country, and the Fed behind this cheap money. So they've pumped too much cheap money into the system for too long, and now you've got the sad effect of that. And you can't put the brakes on. I mean, you're seeing, sadly seeing in the news where countries there's demonstrations and protests because of high cost of, living increasing because of inflation. So that is not good from a geopolitical side. And you can't stop inflation just like that. It takes a long time. There's lots of things you can do. I mean, exchange rates is another important factor. If your currency, becomes stronger, that means you can buy goods cheaper from external sources from other countries. So that can help. But then the issue with that is, other countries will obviously, rebalance their exchange rates, and eventually everything gets neutralized over time. So, in short, the Fed have got no chance. No chance. And I know everybody gets worried about recession, but this is the normal, economic cycle. We just have for the last so many years just had apart from obviously COVID affecting the world, which hasn't helped, and other disasters, we've just had an upward path on the stock markets. It's been, we're not used to recession, but that is part of a cycle. I'm sadly old enough to have been through a few, and it is part of the cycle. We just got to expect it to happen, and we can't just rely upon the central banks to always bail us out, because eventually they run out of firepower.
Eventually, they do run out of firepower, or they just completely destroy the currency, it seems like. So where do you see this heading, and how is it going to impact the stock market, the precious metal markets, all the markets that people have their eyes on this channel?
Yeah, well, stock market wise, obviously recessions, less consumer demand being, reduced by obviously interest rates means, lower revenue growth for companies. If you take the US, obviously, huge bulk of the consumer controls the GDP and the country. So consumer spending is ballpark of what drives the US economy. So that reduces less revenue, bankruptcies, et cetera, of industries will follow. So recession is not good. It's going to be very painful for the stock market, which is already an all-time high, and it's just come off a little bit now, but there's a long way to go if you look back at previous valuations of the stock market and the bullishness there. And quite a few companies control the stock markets. There's some very large companies that are, all you need is a re-rating of those companies. Their revenue growth has come down, and that's a significant drop percentage-wise in the markets. So yeah, pretty negative outlook. I'm sad to say on that side of things, but only to be expected. It's a cycle. In that sense. So nothing you can do, just batten down the hatches and be wise and prudent with where you spend your resources and your cash, and ride out the downturn.
And how do people ride out that downturn? Because it seems like the interesting thing is, at least right now, as we're seeing the beginning of this sell-off, a lot of people think it could get a lot worse, as you're mentioning. We're seeing even in the sectors that seem to be safe havens, right? So gold, silver, precious metals. We're seeing a sell-off in them as well, because and that's typical when we begin to see a crash, that people want to sell everything. But we do see them rebound real quickly here. So your perspective on precious metals right now, and where people can go to batten down the hatches for safety at the moment.
Yeah, you're right, Elijah. I mean, you get a natural sell-off in all asset classes, risk off, as it's called in the marketplace. And that's happened from the even more volatile and more riskier assets like the Bitcoins and the crypto stuff, and gold obviously has come off. Gold's a little bit different because it's also a US dollar product. So US dollar interest rates and the US dollar currency, when you see the US dollar strengthen, then you do see a negative effect on gold price. And that's, I think, part of it, as well as a bit of sell-off in the marketplace. But as you say, gold stocks are sold off significantly on that. But I'm very much, and I always have been, and I'm in the metals and mining business, so you probably expect me to be, but I've always been a very strong proponent of gold as part of your portfolio. And whether that's gold stocks or whether that's physical gold, or in effect, the The company we're involved in, Empress, is a royalty company. So that's even better in my personal view investment at this time. And then physical gold. But gold has always been a safe haven. It's US dollar, so strong, good, asset to have in a portfolio. And more so in the downturn, when you've got, it's an asset which you can easily, portfolio-wise liquidate. It is, when you look at the comparisons over the last 20 years, it's always held its value compared to other asset classes. And in my view, it will retain and always has retained good value in a portfolio.
Now, in this environment, I know one of the things that is so interesting is you can hold the physical metal in your hand, right? And that's a really great way to invest in the precious metals. There are discovery companies, there are development companies in the mining sector, there's the mining companies themselves, and then something that very few people are actually aware of is royalty companies, and that's your company, Empress Royalty. If you could share with our viewers what a royalty company is. And what I'm keenly interested in, and I think our viewers are as well, is in an environment of inflation, what's the best way to play that, right? And royalty companies, I've heard, is you kind of get the upside of the gold price without being subject to the increased input costs of mining. So can you share with our viewers what is a royalty company and why is it such a good play during times of inflation like this?
My pleasure. So, and let's say we got involved with Empress at the beginning. We saw the opportunity of creating this royalty company looking at smaller size investments. So there's some very large royalty companies and streaming companies out there that have been very successful over the last 10 to 15 years, but they've gone to a certain size where their investment ticket size is too large. It's over 100 million plus. So Empress is very much focused upon this smaller sector. Because we saw the opportunity of limited competition. And what a royalty is, in simple terms, it's an investment made into a mining company. And in return for making an investment, you receive a percentage of their revenue or percentage of their product, being gold or silver. So it is a long-term investment, which gets a long-term return from the mining company. It's not debt. It's not equity. It's really in the middle of that. So from a mining company's point of view, there's no equity dilution. There's no debt to repay. All you do is you provide, as you sell your product, a percentage of that either in physical or in dollar terms. So it's say a 2% royalty. They provide 2% of that revenue in gold or in dollars, depending on how the contract is fixed and agreed.
Now, how does a royalty company typically react to the gold price? Because I know a lot of people on our channel are looking at precious metals, and there's kind of a comparison between like gold and silver, right? So gold is safety, right? It is a more stable asset than silver. Silver is a greater risk reward potential. What is the risk reward potential in a royalty company?
Well, the royalty companies, they're take Empress, for example. It's a great model, which obviously now is being replicated in a lot of other industries, and the oil industry on the royalty side was one of the first to put this in quite a lot of scale. So, the contracts are written with the mining company. You invest in that mining company, you get a percentage of their revenue. So if that company is even more successful, you're getting a bigger percentage coming through. So you've got all the upside of that mining company, finding more reserves, increasing production, whatever they, exploring, for example. So you really outsource all that mining risk. And I think you mentioned, Elijah, obviously inflation, that's not just linked to, consumers. It's obviously all the mining industry now has got increased inflation within their cost base. But as you can see from, and take Empress as an example, we have limited overheads. So we have 4 members of staff, and that's it, really running the business. So it's not like the cost inflation is really just wage inflation, the standard wage inflation. We don't have all the cost inflations that you see in a mining business. So the margins are very healthy from a royalty business. So yes, gold and silver prices, as you mentioned, we're about 50-50 gold and silver, and we're just a precious metal royalty company, so we're very much focused just on precious metals. We will be affected by, the pluses and minuses you see in those metal prices, but the key thing is we have a very healthy margin because we've got very fixed, low operating costs. And inflation is purely not linked to consumables or anything of that nature from us. It's really just linked to the staff costs. So very low. And that's why the healthy margins, if prices do come down, yes, there is some effect, but not as significant as if you're in a mining company environment where obviously you've got your operating costs going up with inflation and obviously your revenue line coming down. So your margins are squeezed much more than you are in a royalty company.
I think that's so key because when people think of the price of gold going up, like, oh, well, that's going to be fantastic for miners because, they mine the gold out of the ground. But it depends on the mining company itself and what is their cost structure and everything like that. With a royalty company, if the price of gold goes up, even if inflation is causing that and input costs for the miners is going up, it's not going to be impacting the royalty company. I just think that is such a key element to highlight there. Did you want to share with our viewers a bit more about Empress itself, some of the miners that you are partnered with on a royalty basis, and just want to highlight a few of the projects there?
Yeah, sure. Thank you for that. And yeah, just to reiterate, you're totally right about the squeeze on the margins. Every business is getting squeezed on margins, but less so with a royalty company because of its easy fixed cost base. And that's why, not that we set up the business because we knew inflation was coming. We're not that clever to predict inflation we've got, but it was set up obviously for business opportunity. And I'll talk about some of the opportunities we have in a second. And obviously, as a result, it's a perfect position business now with inflation, around the corner. And, as I think just starting to accelerate in this world. The assets, Empress has been around for 18 months now, so fairly young in its life. We put a portfolio of assets together. We have one producing asset, producing revenue for us, and we have two development assets which are now just getting into production. So quite an exciting time for us. And that is a key tipping point for the business. And the existing producing asset is in Peru, so in Pite. We invested and they've been expanding their production. So our capital we put to work helped them to expand, and they're in the midst of expanding. So that's producing existing revenue for us. The two other assets that are now just starting into production, so as I say, exciting times for us, is Tahueto, which is a high precious metals lead zinc mine in Mexico. That's just had its first concentrate shipments. We've got our first dollars out of that, and that's now going through ramp-up phase to get into full production over the next 6 months. So that's a great asset for us. And the third one is Mozambique. It's a gold plant in Mozambique, and they've just produced their first gold. And we get a royalty from all of those. So we are predicting from what was 18 months ago very much as time of investing to now the harvesting period. And we're projecting well over $27+ million coming in over the next 3 and a bit years from those three assets. And obviously, that's really a change from where we were a year ago when we started, which is purely investing, to now actually reaping the rewards and getting that cash flow in for the business. And as we said, we've got fairly fixed operating costs as a business, so that money will be able to use to reinvest some of that into new investments. And then we also will consider in next year once the revenue is and these mines are fully ramped up, and we've got looking at potentially putting in a dividend policy for the business, so giving some money back to shareholders via dividend.
Now, one last question I did want to ask you was about jurisdiction of some of the mining companies that you are partnered with. That's definitely a key question for operators of mining companies because you might have a great mine, but the laws of the country and everything might make it difficult to mine there. What are some of the key things that a royalty company like Empress has to consider when partnering with a mining company and the jurisdictional risk in a particular area?
We've really set up Empress to be a little bit more on the risk side in respect to the political countries. So there are other companies out there, so-called competitors, but other streaming companies out there that only look at certain jurisdictions. They don't have the same risk profile as us. The reason why we're content to look at some of these countries like Mozambique, for example, and Peru even, we're investing whilst they have the presidential election going on, and there's lots of electioneering about, mining will be, potentially heavily taxed, and there'll be typical electioneering coming out of the election there. We have worked and operated in these countries for a long time. So we know the legislations, we know the politics, we have a good handle on how to work in these countries. I mean, one of the companies, Endeavour Financial, that I'm the managing director of, we're the investment advisor to Empress. So we bring ideas, we look at solutions, and it's very much creating royalties here. We're not buying them, which a lot of the competition do. We're creating them. So we're working with the mining companies, we're providing them with the funding, we're negotiating the contracts. But also as a result of that, we can understand the business and obviously the business environment, which involves the politics and how they manage that in the country. So really our expertise, our experience of these countries, understanding the legislation, understanding the financial benefits. Mining in certain jurisdictions is so important to them, that they are very unlikely to actually penalize the business because that's a huge part of their GDP. So looking at mining as a whole, how it fits into that country is an important assessment of why we're happy to be partnering up and investing in those countries. I mean, Peru, for example, huge generator of GDP and growth on jobs and the whole stability of the country. So whilst there may be some electioneering, it's very unlikely when the president gets in, he goes, okay, I'm going to change the world, I'm going to do this. Then his advisors will go, okay, well, if you do that, then there's going to be a huge GDP drop. People will be out of work. And guess what? You're meant to be doing the opposite. You're meant to be improving people's lives, giving people jobs and creating wealth. So we often see the benefit of mining to certain countries outweighing the politics. And that's how we get comfortable in some circumstances.
All right. Well, David, thank you so much for your time today. Before we let you go, if our viewers are interested in learning more about your company, where can they find you? And did you have any last thoughts for our viewers?
Yes, obviously, Empress Royalty website. We've got all our contact details on there. So please do reach out, do talk to us. Happy to answer any questions. I know some people won't know about royalties, and it's very difficult in a short amount of time, but I appreciate Elijah just to give you a background on it. Really, we are at the tipping point for a company. So we've invested wisely. We're now getting the results of our investments coming through. So we'll have significant revenue coming through, and that will then drive through, we believe, in revaluation of the business and obviously appreciation of the share price. So please do take a look at Empress, and happy to answer any questions your viewers may have. And hopefully you can invite me back in a couple of months' time. We can talk more. So would appreciate that as well.
Well, it'd be great to have you at that time. We'll be putting all the information to Empress Royalty in the description of this video. Check it out. David, once again, thank you so much for your time, and God bless.
Thanks, Elijah.